Japan's first quarter growth data for 2025 just landed with all the grace of a sumo wrestler attempting ballet. The economy is shrinking. Again. This isn't just a blip, it's a worrying trend. Consumer spending, the bedrock of any healthy economy, is down. People aren't buying things. Can you blame them? Exports are struggling too. Global demand is shaky. Japan's manufacturing prowess isn't enough to save the day this time. And what about Japan's corporate titans, especially the auto industry? Toyota, Honda, Nissan. Their recent results? Disappointing. They're wrestling with supply chain issues and the shift to electric vehicles. Prime Minister Kishida must be thrilled. His approval ratings were already low. What's the government's plan? More stimulus. Japan is already swimming in debt. Are there any good ideas left? Public confidence is taking a nosedive. It's hard to be optimistic. The economy contracted and the picture's grim. The shift to electric vehicles is a global challenge. Now they're playing catch-up in a hurricane. These economic numbers can feel abstract, but this crisis is hitting real people hard. Everyday life in Japan is becoming a struggle. Imagine this. Your wages haven't really gone up in 30 years, and now the cost of everything is skyrocketing. Food, fuel, utilities, it's a recipe for misery. Let's talk about rice, the staple of the Japanese diet. Rice prices are through the roof due to bad harvests and inflation. Even homegrown rice costs more. So how are people coping? Sales of furikake rice seasoning are up. People are buying more to make plain, expensive rice taste better. It's a small detail, but it speaks volumes about the daily grind. Energy bills are a nightmare. Public transport is getting pricier. Young people are putting dreams on hold, starting a family, buying a home. These things feel impossible. The social fabric of Japanese society is fraying. You can feel the anxiety in the air. It's thick like bad miso soup. The cost of living is rising and people are struggling. The weak yen makes imported goods more expensive. The social impact is profound and the anxiety is palpable. The daily grind is getting harder. When people are squeezed this hard, they don't stay silent forever. In Japan, a country known for its social order, the anger is spilling onto the streets. Protests are escalating. We're seeing ordinary citizens, grandmothers, office workers, students. They are fed up and making their voices heard. What are they mad about? Decades of economic mismanagement and the rising cost of living. The demand is simple change, real change. How is the government reacting? Often with a visible police presence. Are they truly listening or hoping it all fizzles out? Prime Minister Kishida and his ruling party face historically low approval ratings. There are increasing calls for his resignation and new elections. This political instability is like pouring gasoline on the economic fire. It creates more uncertainty and paralyzes decision-making. The discontent is deep-rooted and won't disappear with vague promises. What a mess. Let's talk about debt. Specifically Japan's monumental debt. Over 260% of its GDP. Imagine your personal debt being more than twice your annual salary. So who owns all this debt? Mostly it's held domestically. The BOJ has been buying up government bonds, keeping interest rates low. But now the bond market is jittery. Yields are starting to rise. The BOJ is trying to control this, a policy called yield curve control. Why should you care about Japanese bonds? Because if Japan's bond market melts down, it's not just Japan's problem. Think financial contagion. Think global markets having a collective panic attack. International investors are watching this with bated breath. Will there be capital flight out of Japan? A sudden sharp fall in the yen? The BOJ is caught between a rock and a hard place. If they let yields rise too much, the government's interest payments explode. If they keep printing money to buy bonds, the yen could crash. The stakes are incredibly high. This is not a drill, people. Whenever a country faces a massive debt crisis, comparisons arise. Right now you hear one name whispered a lot in relation to Japan, Greece. Remember Greece? Their debt crisis nearly tore the Eurozone apart. There are uncomfortable similarities, but also big differences. Japan's debt is mostly held by its own citizens and institutions. Japan has its own currency, the yen, unlike Greece with the euro. Japan's economy is vastly larger than Greece's. If Japan unravels, the global impact could be massive. What can we learn from Greece's ordeal? Years of painful austerity and social unrest. Could Japan face a similar fate? The thought is terrifying. There's this term, Japanification, describing chronic economic stagnation. Now it might describe something far more dangerous. Japan's current predicament is a stark warning. Pay attention, world. To understand how Japan got here, we need a quick history lesson. After World War II, Japan performed an economic miracle. From ashes to an industrial powerhouse, Japan Inc. was unstoppable. Then came the Plaza Accord in 1985, strengthening the yen. The stronger yen inflated a massive domestic asset bubble. The late 1980s in Japan were wild. Stock prices soared, real estate prices became insane. People felt incredibly wealthy. Money flowed like water. Then in the early 1990s, the bubble burst spectacularly. Stock market crashed, property values plummeted, banks were saddled with bad loans. What followed were the lost decades of economic stagnation and deflation. The government tried everything: stimulus packages, monetary easing. Nothing really worked, and that long, painful hangover has led directly to today's even bigger headache. The economic miracle turned into a cautionary tale. The bubble burst, and the lost decades began. The government tried various measures, but nothing worked. The hangover from the bubble burst continues to affect Japan today. The economic miracle turned into a cautionary tale. The bubble burst and the lost decades began. As if the economic mess wasn't enough, Japan is grappling with a demographic crisis. Japan is a super-aging society with a high proportion of elderly people and very low birth rates. The population is shrinking fast. Fewer people means fewer workers and consumers, dragging on growth. Who's going to pay for the pensions and health care of all those elderly citizens? The tax base is shrinking, creating a mathematical problem with no easy solution. Rural villages are hollowing out, schools are closing, and young people face the double burden of career and caregiving. There's a sense of quiet decline in some parts of the country. The government has tried various things, but nothing has moved the needle significantly. The demographic trends are deeply entrenched. This demographic time bomb is ticking louder and louder. It's amplifying every other crisis Japan faces. The social impact is profound, and the anxiety is palpable. The daily grind is getting harder. The demographic crisis is a perfect storm. Now, you might be thinking, why should I lose sleep over Japan's problems? Japan is not an isolated economic island. It's a major global creditor. What happens in Japan does not stay in Japan. Japanese companies are critical players in global supply chains. If Japanese production is disrupted, the ripple effects will be felt worldwide. Remember the 2011 earthquake and tsunami? This could be worse. If Japanese bond markets unravel, it could trigger panic in global financial markets. Investors might dump assets perceived as risky. We could see a global recession or worse. A severely weakened Japan would change the balance of power in Asia. It could create a vacuum and embolden regional rivals. Stability in that part of the world is already fragile. Japan's economic health is linked to global security. This is about more than just yen and bonds. So what can Japan do? The government's options are limited and mostly terrible. More fiscal stimulus? They're already drowning in debt. Austerity? Politically suicidal and would deepen the recession. Structural reforms? Needed, but slow and face huge resistance. The Bank of Japan is in a tight spot. If they raise interest rates, they risk blowing up the bond market. If they keep rates low, the yen could nosedive, importing more inflation. This situation calls for bold, decisive action. But is there the political will? Is there even a consensus on solutions? The political system seems paralyzed while the crisis gathers pace. It's like watching a car crash in slow motion. Japan is standing on the edge of a precipice. This isn't just a story about one nation's economic woes. It's a test case for how advanced economies deal with massive debt and aging populations. The early results are not encouraging. They are, in fact, terrifying. The world is watching, holding its breath. Japan's path ahead is unenviable.